The Monetary Policy Committee met on 3rd, 5th, and 6th April 2023 and assessed the macroeconomic situation and its outlook. It decided unanimously to keep the policy repo rate unchanged at 6.5% in this meeting with readiness to act should the situation so warrant. Let me read this sentence again. The Monetary Policy Committee decided unanimously to keep the policy repo rate unchanged at 6.5% in this meeting of the MPC with readiness to act should the situation so warrant. Consequently, the standing deposit facility, that is SDF rate, will remain unchanged at 6.25%, and the marginal standing facility, that is the MSF rate, and the bank rate at 6.75%. The MPC also decided by a majority of 5 out of 6 members to remain focused on withdrawal of accommodation to ensure that inflation progressively aligns with the target while supporting growth. Let me emphasize that the decision to pause on the repo rate is for this meeting only. I would now like to explain the MPC's rationale for these decisions on the policy rate and the stance. While the recent high-frequency indicators suggest some improvement in global economic activity, the outlook is now tempered by additional downside risks from financial stability concerns. Headline inflation is moderating but remains well above the targets of central banks. These developments have led to heightened volatility in global financial markets as reflected in sizable two-way movements in bond yields, fall in equity markets, and the US dollar shedding its gains from its peak of September 2022. Amidst this volatility, the banking and non-banking financial service sectors in India remain healthy, and financial markets have evolved in an orderly manner. Economic activity remains resilient, and real GDP growth is expected to have been 7% in 22-23. Consumer price inflation, however, has increased since December 2022, driven by price pressures on cereals, milk, and fruits. Core inflation remains elevated. Looking ahead, headline inflation is projected to moderate in 2023-24. The monetary policy actions taken since May 2022 are still working through the system. Accordingly, the MPC decided to keep the policy rate unchanged to assess the progress made so far, while closely monitoring and evolving the inflation outlook.